Hello, and welcome to our Market Alert video for today, which is March 31, 2023. And it is the end of the first quarter of this year. Wow, already passed. And I want to go over with you where we think we're going to go from here and what our strategy and what our thinking is regarding that. So before I go anywhere, though, I want to share a story with you. My grandson has said, "I love you" for the first time. And, he'll be 2 years old on September 1st. So but he's not said it since. Fortunately, though, my daughter caught it on video. And so what she sent it to us. And so my wife now watches it on repeat over and over and over again, where the little boy is saying, "I love you, I love you, I love you, I love you." I got to say I'm a little bit jealous, but, that's life. Anyway, I want to share with you pardon me. I want to share with you a quote from Sir John Templeton, who is one of the most legendary investors of the last 100 years. He built the Templeton funds. And he said, and I quote, "Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria." So what does that mean? Well, basically, when everybody thinks that it's the worst and it's horrible and nasty and nothing's good, the most pessimistic, that's usually when bull markets are born. Then what happens is people start to become a little skeptical about their pessimism. They start saying, well, maybe I was too pessimistic. So they start being skeptical, but I'm still not ready to buy that we're in a bull market. I'm still skeptical. And that's where the bull market grows. And they mature on optimism, where finally people start saying, yeah, you know what, maybe things are good, and maybe it is all well and we're all fine. But then those same bull markets tend to die on euphoria, where people just go crazy, no risk, throw money at everything in sight because nothing can go wrong. That's usually when the bull market is over. So where are we in all of that? Well, right now, if you've been watching the news and listening to all the talking heads and everything else that's been going on, you probably feel like everybody is pretty pessimistic, right? We're going to have a terrible recession, a banking crisis. The Federal Reserve is going to raise interest rates and cause a terrible recession. We're going to have massive unemployment. I mean, it is going to be terrible, okay? I would call that the definition of pessimism. However, if you've noticed, in the middle of all that, in the middle of this banking crisis and everything else that's gone on, the market's gone up for the last 3 weeks in a row, and quite nicely. So that feels like market going up in the middle of all the pessimism, which is where bull markets are born. So let's look at one of the big drivers of the pessimism, which is inflation, and the concern that the Federal Reserve, to combat that inflation, is going to have to raise interest rates so high that they cause a devastating recession. So I want to share my screen with you here. So give me a moment. And I want to share this chart with you. And we've looked at it before. And so it may look familiar to you if you've been getting our videos. But I want to go over here to the top left, right here where you see date. That's the date. This is the CPI, the number assigned to inflation. This is the change in the inflation from month to month. If you take that change and make it annualized, that's what this column is. And then this column here is the year-on-year change, okay, from last year to this year. Now, as you guys know, if you've been watching our videos, the way they calculate inflation is they drop last year's month off and they add this year's month on. And that gives us the change and therefore the inflation rate. Well, the two yellow lines right here is what I want to focus on for our conversation for just a moment. So last year in March, the CPI went from 283 to 287, which was a 1.34% monthly change. That represented a 16% annualized inflation rate. That's why everybody freaked out. Oh my gosh, we're running at 16% inflation. So what are they going to do? They're going to drop this one off because that was last year. And in a few weeks, we're going to find out what the March's inflation rate, and they're going to add this yellow line on here. Our projection is that inflation will be just as high this month as it was last month, the monthly change, 0.56, which it was in February. If that's the case, we're dropping off a 1.34, 16% annualized, and we're adding a 0.56, 6.7% annualized. If that happens, then the inflation rate will drop to 5.2. Last month, it was at 6. That's a big drop. Now, if we continue to say that inflation stays at the level that it is now, it doesn't go down at all, doesn't go up, but it stays that way for the next 3 months, 4 months, then the inflation rate will go down to 3.8, under 4% by the end of June. Why? Because we're dropping off these big 13%, 16%, and we're replacing them with these 6.7s. And if that happens and inflation continues to go down, we think investors are going to take confidence from that, and we think that they're going to invest accordingly. Now, the other thing also is that if inflation does in fact do that, then the Fed does not need to raise interest rates to the sky like Paul Volcker did up to 18% back in the early 80s. And if that's the case, then all this pessimism and all this fear and everything else may be overstated. And that'll bring, we think, some investors into the market, and we think the outlook would be positive. The other thing also is that the recession is likely. We think we'll have a recession if we're not already in it, but the high employment numbers should help to mitigate that. And the fact that we think inflation is going to go down means the Fed won't have to raise interest rates as much as maybe is feared, and that won't make the recession as bad. So we think we will have a recession, but it won't be as bad as the pessimists have been building. So our outlook is positive going forward. We still think the rest of this year should be good, but you never know, right? That's the thing. And crazy stuff happens. The unknown could change everything. Something new could come along. And if that does, it could upset the apple cart. That's why we think it is so important to have a protection strategy. And my question to you, the title of this video is, do you have a protection strategy? Because if you don't, and the pessimists turn out to be right, which they could be, and some of the pessimists are saying we could go down 25% from here. If that's the case, what would that do to your retirement plans, to your plans of staying retired or retiring when you want? We think that might impair them somewhat. And we don't want that for you. We want you to have peace of mind. We want you to enjoy your second childhood without parental supervision. That's what we call your retirement. And how can you do that if you're losing money hand over fist? We don't think you can. So visit with one of our retirement planners, get a second opinion, and see if you think that our philosophy of protection of principal makes sense. And as you know, our strategy said to sell in April of last year, told us to stay out throughout the rest of 2022. So all the losses that came after April, we did not experience those for clients that followed our advice. So we want to do that with you if we can. So visit with one of our retirement planners. There's a link under this video where you can click to do that. And we'll do our best to help you, no charge or obligation, and we'll part friends regardless of what happens. Share this video with as many people as you'd like. We want to help as many people have that second child as we possibly can. So thanks for watching this video, and we'll talk soon.